Okay, so the first thing that we do is we demarcate the event, which starts at 10 o'clock New York time, right? And then we're looking to see if the event itself, and this is my data window, so you could actually see the data window. And this is a 5-minute chart, 5-minute simple chart, and it has only one indicator on it, which is RSI. And we're going to use RSI to help us time the entry of our trade, right? Effectively, what we're doing in a big philosophical sense is we have created a system that tries to trade event risk on a retrace. On a retrace. In other words, there's event risk, there's a reaction to that risk, then there's a retrace, and we're going to try and enter it into the trade when the flow turns again in the direction of that event risk, right? So here's the event risk at 10 o'clock on Wednesday morning. The Bank of Canada comes out, and it kind of sounds dovish. He kind of says, you know what, nothing in the economy is really going as well as we think. We're not at all opposed to, we definitely think the currency is a little too high, the Canadian dollar is too high, and we're not completely opposed to, maybe cutting rates down the road. All of this is negative Canadian dollar, so dollar CAD spikes up. And the first rule of AJAX is to see if we can get a reading in the RSI of 70 or above or 30 or below. That means we're looking for extreme readings within the first 15 minutes of the event. So in this particular case, the RSI hit 71 right away in the first 5 minutes, right? Then the next thing we see is after it hits 70 or higher, we'd like to see the RSI come back down below 64. So momentum goes up, then momentum finds a little bit of a pause, and it comes back down below 64. In this particular case, this was a really good example because everything happened within 5 minutes. Sometimes it takes hours for this to develop. But anyways, in this particular case, everything happens within 5 minutes. So first 5 minutes, it goes up 70. The next 5 minutes, it drops below 64. As you can see, it's 58 on the candle, right? And then the next candle, which is a 15-minute candle, right? It goes back up above 64. And our trigger point to the buy side is 64 or higher. So it drops below 64 and then it comes back up above 64. That tells us momentum has returned. We want to go and buy this particular price point because it means that there is continuity of the fundamental news, right? And the way we trade this is with a 20-point stop and a 10-point target. So we would have entered here at 110.007. Our stop would have been 109.87, 20-point stop. And our target would have been 110.117. So we're coming in, we get a little bit of a retrace. We have about a 10-point retrace against us, right? We suffer a little bit of a drawdown. But then within about 35 minutes, right, or 25 minutes, the price goes all the way up to 110.24. Our target is 110.17. So boom, we make the target. We made this trade, right? Now, what's cool about AJAX, and this is a very, again, I'm only giving you probably about 20% of the rules. And if you want to know all the rules and all the key details, you're going to have to buy the course because it's very complicated. I don't have the time to go through all the the key components of how to trade. But what is cool about this is that the AJAX strategy works not just on the particular major of the event, but it can work across the whole complex of that particular currency. So this is a Canadian dollar. It's a Canadian event risk. And the whole Canadian complex, which is Euro CAD, Aussie CAD, Kiwi CAD, Pound CAD, is open to the possibility of a trade in this particular manner. So let's take a look and just look at a couple of other CAD currency pairs during this time frame to see if there was any additional trades, besides this one. So here's Aussie CAD, right? Okay. So here's Aussie CAD, which is another part of this, Australian CAD complex, right? And again, this is positive news. It's negative news to the Canadian dollar. obviously making the Aussie CAD go up. So here's Aussie CAD. The first 5 minutes, the RSI goes to 74. Then it drops down to 60, right, below 64. Then it comes back up above 64, which is above 65. Again, it gives us a buy trigger right over here, 50 minutes afterwards, at 103.04. Our stop is, again, 20 points, which would be 102.84, and our target is 103.14. Boom. It makes target right over here about 13, 14 minutes forward. Now, many of you are going to say, well, how come your stop and targets are 2-to-1 negative? That's a very negative risk-reward ratio. It is a negative risk-reward ratio. Well, because the way the setup is structured, it's a high probability setup. Particularly when we trade it on very, very, what we call high volatility important events. And in our back tests against those big, high volatility important events, our accuracy rates have ranged anywhere from 81% to as high as 91% over a period of 2 to 3 years. Now, of course, past performance is not indicative of future results. And of course, everything can go wrong. And of course, you yourself certainly have the option, both in the MT4 algo, which we provided in your own version of how you want to trade this, to change the parameters to maybe 1-to-1, or maybe trade 15 stop, 10 target, whatever you like. You can do this. But in the backtesting that we've done, because we've had good quality accuracy success, we're comfortable trading this on a 2-to-1 basis because we're confident that we have a reasonable chance of being 80% accurate in this particular setup, of course, knowing that past performance is not indicative of future results. But as you can see, here's 2 out of the trading complexes, and both of them, definitely work.